No, we are the Association of British Credit Unions, which is the main trade association in Great Britain, representing now new figures, fresh in, around 52% of all credit unions currently in England, Scotland and Wales. In my previous life, I was the Chief Operating Officer for a community credit union for almost 10 years. So really excited to be part of the conversation. Familiar themes for me in my credit union world and in the trade association world. Looking forward to getting into it. So the theme for today and the topic that we're covering is growth. We know that the UK government has committed to doubling the size of the co-ops and mutual sector. Now that's a really ambitious target. Credit unions are growing slowly, not keeping up with peers in overseas, certainly not, but credit unions will play a significant role in this. But for some, that is absolutely going to mean that there's going to need to be investments in technology, more of a move towards automation. So the conversation today will be a focus on growth through technology, inclusion, collaboration. So thrilled to welcome your panelists and speakers today, and I'll hand over to Chloe for introductions, please.
Hello, nice to see so many of you here. This is so lovely. Hi, I'm Chloe. I'm the CEO and one of the co-founders of Vouchsafe. And what we do is we enable people to verify their identity, go through anti-fraud checks, prove their address with what evidence they do have, instead of restricting that to just a passport or a driving license. We do all of it automatically, and we've been working with credit unions for a little over a year now, just since we launched just over a year ago. And we also love the team at Incuto, and we're in a partnership with them. And I think that that's probably the perfect opportunity for Steve to come in.
Brilliant. Thanks, Chloe. Good afternoon, everyone. Also, plenty of familiar faces, but one or two new ones. So for those of you that haven't met me before, my name's Steve Lockwood. I'm head of delivery for Incuto. And I usually, at this point, insert the same introduction, or I have been doing for a little while now, so I won't break with tradition. My background is, I spent 20 years in recruitment before I actually recruited myself to go and work with Andrew. And I've been at Incuto now for the last 6 years, during which time I've performed most of the roles in the business, certainly anything that doesn't involve me actually having to type code. Please don't ask me to type code. I wouldn't be able to write a line of it if my life depended on it. But for those of you that are maybe less familiar with Incuto, we provide the digital infrastructure that powers credit unions across the UK, which is at current count more than 60 and growing. We support everything from member onboarding and payments to loan automation, and we work exclusively in this sector. So our focus is on helping you grow and compete while staying true to the values that define you. The government's ambition, as Debbie opened with, to double the size of the community finance sector by 2035 is bold, and the reality is it won't happen through policy alone. It will happen because you, the credit unions, continue to innovate and adapt, supported by organisations like AMCL, Vouchsafe and ourselves. And that makes growth practical and affordable. You're at the heart of this movement. You're the ones building trust in your communities and delivering fair, affordable financial services every day. Our role collectively is to make it easier for you to do that at scale with the tools and automation and infrastructure you need to compete. And that's really what today's session is about. It's about how we help you scale your impact on, and reach on more people without losing the community feel and personal connection that makes you so distinctive. Debbie, I'll hand back to you to introduce our first topic.
Excellent. Thank you, Steve. So the first topic that we want to cover in this conversation is going to be automation and affordability. So how can credit unions use automation to reduce costs and to scale lending sustainably? So I'm going to jump straight in with Steve, if that's okay.
Of course, absolutely. One of the biggest challenges I think that you face when trying to grow is simply the cost of doing business. Lending, especially smaller value loans, is expensive to run. It takes 2 or 3 people to process every application, and it becomes really difficult to grow your loan book and still make it sustainable. For us, automation is about affordability. It's about helping you reduce the direct cost of lending so you can grow safely and sustainably. That starts with removing the repetitive manual tasks, checking balances, processing payments, rekeying information between systems. Those jobs don't strengthen your member relationship. They just eat into your team's time and capacity. The bigger leap forward has been automating the lending process itself, from application right through to approval and disbursement. We've been working closely with a credit union that's now in the final stages of testing a fully automated end-to-end journey. And what we're already seeing is that once that flow is automated, members can receive a decision and funds released in minutes rather than days. The aim isn't to take people out of the process. It's to free your staff to spend time where it really matters, supporting vulnerable members, managing expectations and building stronger relationships, instead of repeating the same administrative tasks again and again. Andrew said something to me the other day which really resonated. If you can't make money on your first loan, you can't afford to double your book. Automation helps you reach that break-even point, which makes genuine growth possible.
I've just, do you mind if I come in there, Steve?
I don't mind at all, far away.
I think there's something there that really resonated with me, and from what I've seen, and I think what the whole Vouchsafe team have seen when we've come and visited credit unions, and that is the knowledge and personal touch and personality that credit unions have, and that you all know your members well. You know what they struggle with, you know what they enjoy, you really are at the heart of the community. And I have felt in the financial sector that so much automation is built with the intention to make everything as quick and sort of low touch, low human interaction as possible. Whereas there is an element of that to what I think what Incuto and Vouchsafe are doing, but actually what is at the heart of what we're doing is trying to support credit unions to support their members. And if you're spending time digging through emails looking for a scan of a passport or a photograph of something that someone has sent in, or if your members aren't even able to get through a verification journey because they don't have a passport or a driving license, then all of those valuable minutes and hours that you could spend actually helping members is spent in an inbox, or, you know, answering those kinds of questions and trying to find ways around processes. And for us, it's about capturing the magic and trying to take things off of your team's plate so that they don't have to spend so long manually doing things that are automatable.
Yeah, I think just to build on that, Chloe, I think one of the things that we met up, the three of us met up a few days ago, just to sort of kick around the topics and sort of share ideas on what it was we wanted to talk about. And one of the parts of that was, well, what sort of questions do we think that we might get in return? And I think I've certainly, in my experience of going out and being on site with many of you actually that are here today, but many credit unions, is that I think there can be a sense that automation can potentially dilute that sort of personal touch, that sort of identity. And I genuinely don't believe anything meaningful needs to be lost if you do automation correctly. The goal isn't to remove people, it's to remove friction. Automation helps you serve more members faster while freeing up your teams, exactly what Chloe just said. To have those one-to-one conversations that really matter, rather than the time being taken up doing those sort of, as we've already said, those sort of administrative and repetitive tasks. So I fundamentally don't believe that automation has to result in a sort of a loss of identity or a degradation of that sort of value that sits at the heart of the sector.
Yeah, especially if it's done well, which I know we're both our organisations trying to do. But I think that it is always a risk, but it's something that we've tried to do incredibly carefully with lots of feedback, and it's an important thing, I think, to respect that credit unions are sort of often the only time someone will get to speak to another person in person about their financial situations. It's really like banks the high street banks are closing. There's fewer, you know, even if they are open, they're open for fewer and fewer hours. Honestly, I think the Santander near me, if I blink, I'll miss them. And it just means that we have to try and protect, I think, that time of the teams of credit unions so that they can have those meaningful discussions. And it's something that we're always looking for feedback in as well with our process, just to make sure that it actually works. So, and we've been provided with plenty from some of you on the call, and we always want more of it because it is a really, really hard thing to achieve, I think.
Perfect, thank you. So I'm going to move us on to topic 2, and Jay has put in the chat, we will have a dedicated space for questions and answers, and also I think sort of opinions on, there's a lot of credit unions on the call. What's working for you? How do you find this move to automation? And I think it's interesting, Mark is on the call. So one of the things that resonates with me around credit unions investing in tech and the changes that they've had to make is the pandemic. So it was Mark that hosted a webinar for us that sort of explained the difference in and the speed in which these credit unions had to move to get through that really awful period of time to be able to deliver services to members. And I think it was Mike that said, and please do correct me if I'm wrong, Mike, but you had a business plan that spanned 5 years where you were looking at bringing in advancements to technology and more automated services to be able to better serve your members. And you were suddenly faced with a situation where you had to do this in a number of weeks to be able to keep providing that service to your members as well. So I think credit unions are particularly resilient, but not always as advanced in terms of tech. And I think that's probably fair to say in some cases, but the pandemic has certainly boosted that. So I hope you don't mind me sharing that, Mike. That was something that definitely sat with me that you'd mentioned previously. So yeah, it'd be nice to get some feedback from the credit unions on the call in the sort of last section in what you're doing and how you feel about automation generally. But topic 2, we're going to look at identity and inclusion in the digital journey. So how can more people successfully join and borrow through credit unions using technology? And again, I'm going to come to Steve first, if that's okay.
Yeah, of course. Well, I'm going to talk a little bit about the relationship that we've obviously formed with Vouchsafe before I hand over to the subject matter expert on this. But one of the biggest barriers to growth is identity verification. I think over the last decade, we've seen that roughly 20 to 25% of applicants fail an automated ID check, not because they're fraudulent, but because their data simply doesn't fit the mold that mainstream systems expect. You'll know the reasons as well as I do. People who've moved house recently, live in flats or shared accommodation, use prepaid bank accounts, or just aren't on the electoral roll. These are the very people you exist to serve, and yet they're often the ones who get stuck in the onboarding process. When an ID check fails, 2 things happen. First, you've already paid for a check that doesn't go anywhere. Second, someone on your team now has to chase extra documents, which slows everything down and adds cost. One of our partner credit unions estimated that those failed checks and the manual follow-ups represent hundreds of thousands of pounds in lost lending, literally in a matter of months. So if we want to double membership, that model simply doesn't scale. You can't double your member base, and in doing so, double your administrative team and remain sustainable. It just isn't. So that's why we've partnered with Vouchsafe. Their solution doesn't stop at pass or fail. It continues working with your applicants, guiding them through recovery steps, automatically requesting alternative documentation, and in some cases, verifying them through trusted local organisations. So instead of losing those applicants, you recover them automatically. It keeps the process inclusive, reduces workload for your staff, and makes sure the technology doesn't end up excluding the very people you're trying to help. To put it simply, Vouchsafe turns a failed ID check into a second chance to say yes, and that's a win for both inclusion and efficiency. But I'm going to hand over to Chloe because she'll speak far better on this topic than me. So.
Yeah, thank you, Steve. And that was an excellent summary. And if you could send me that afterwards, I will go forward and use that, I think. It was great. The challenges of what we call ID poverty in the UK particularly are they're quite widespread, but they're also they change on quite a localized level. So the first thing that we noticed was that we were working with a credit union where they had quite a high rate of applicant members who didn't have a passport or a driving license, but what people did have was what was kindly and warmly referred to as an old Scot card. And so the first thing that we did was we took the Solitaire National Entitlement Card and we taught Vouchsafe how to automatically accept it, because we are so committed to allowing people or enabling people to verify themselves and get through that part of the journey with what they do have, instead of automatically asking them for things that they don't and then turning them away if they don't have it. For us as well, the supporting documents, so this is like your proof of address document, the section on there is where we see some really wonderful different things. Not everybody's got a council tax bill, not everybody pays their own council tax bill. Like we said, we've got people in shared accommodation, and people on prepayment meters as well. And we've started to see a real range of documentation that now we can train our models on. And that means that there are more automatic yeses, but if it's still looks suspicious, but it's, or not suspicious, but if it's still, if an upload still doesn't quite fit the mold, but doesn't look suspicious, we don't automatically verify it, but we let you know. And then you've got all of the information in one place. And the reason we built that was because every organization we've worked with has got sort of a different risk appetite, but on a local level as well, there's more knowledge of the community you're serving. And so there is still a human doing things. Sometimes it's us, sometimes it's the teams that we work, the teams of the credit unions or other organizations that we work with. But for us, it's about actually assessing what a community has and then enabling them to use that evidence to get access to what they need. I think I'd be really interested actually to hear perhaps at the end in the Q&A or even in the chat, if there's sort of anything that credit unions are seeing that are a little different to what you'd normally expect. You know, often people want a utility bill, a council tax bill, a bank statement, but there are things in each community, I think, that we see that are different based on where we are, based on that localization. But yeah, it's sort of, for us, onboarding, verification, getting applicants safely onboarded it's more of a collaborative task than just giving it over to a machine.
And just to build on what Chloe said there as well, I think one factor when it comes to validating identification at the point of lending, I think it's really important that validation step is positioned at the point at where you've already determined you're able to lend or you're looking to lend. Because so much of what we looked at in our data, we can see that ID check is taking place before a decision to lend has been made, and therefore, if the decision to lend is a no, you've already wasted, speculatively wasted money on identifying somebody, or validating somebody's identification without the sort of ability to lend at the end of it. So for clarity, where we'll be looking to place the validation, the Vouchsafe validation in a lending journey, is at the end of the journey when the decision to lend has already been taken.
And I think that's really key, Steve. I think a lot of, I can't speak for all credit unions, but a lot of credit unions that we work with, it is small value loans. So I guess it's weighing up and justifying that individual cost per small value loan. And sort of this way of thinking, I think will be a bit of a game changer in that. If you sort of, you're moving forward at that point that you're being charged for that. And I think that's a really interesting point to note, and something that we're definitely keen to keep an eye on how that partnership plays out. I think I do have some comments in the chat. Perfect, thanks Liz, no problem at all. Excellent. So we're whizzing through these, so we are going to have plenty of time for audience Q&A. So I hope everyone's all ready with the questions. Do pop them in the chat if any come up during all of these individual topics. And of course at the end it would be great if you've got some experience that you want to share with us today as well, as part of the discussion. So topic 3, delivering a modern digital first member experience. So how can credit unions meet sort of modern member expectations? I think in particular with younger digital first type experiences coming through and the competition that's out there, things can be done in a really small amount of time. And I think some credit unions historically have been, not as much now, just for clarity, but there are still some instances where they do want to see the whites of your eyes, or there'd be an expectation that you would need to come in for some sort of formal interview type process before borrowing, and just more control around who the credit unions are lending to within their community, because that's the way that it has been done in the past. How do we meet modern member expectations without losing what makes credit unions unique? So keeping that relationship, knowing your member, that community feel. How can we do this using digital first? And I'm going to go 3 for 3 and goes to Steve first, please.
Thank you, Debbie. Short caveat before I answer this question. I'm conscious that much of what I'm saying, what we're saying here today, it isn't new to you, and this is probably going to be another example of that. But I think it's worth stating. I think if we're serious about doubling membership by 2035, we have to attract the next generation of members, and that means delivering a digital experience that feels intuitive, modern, and fast. Younger members, especially younger borrowers, expect instant decisions, 24/7 access, and real-time payments. They're not comparing you to another credit union. They're comparing you to Monzo and Revolut, or their other banking apps. The good news is that shared technology now makes this level of service achievable without the price tag that would normally have come with it. Through our platform, your members can join, apply, and receive funds through a seamless online experience that's been built once and refined collaboratively across the sector. And that collective approach means you can offer the same professional, polished experience as the big banks while still expressing your own identity and local character. What's important to remember is that technology doesn't replace the human connection, it strengthens it. When automation handles the repetitive tasks, you and your teams get more time to focus on what really matters, reaching out, supporting, listening, and being there for your members. So it's not about losing the credit union magic, it's about making sure it reaches more people. The warmth, empathy, and trust that defines this movement are still right at the heart of it. Technology just helps you deliver that experience faster and to more members than ever before. Chloe, over to you.
I think it's a really important point when you say about technology strengthening, not replacing. We've sort of inspired by credit unions, really. We've kept our, and I want us to for as long as possible, kept Vouchsafe's support channel open, and it still currently goes to mine and Jay's phones. So if a member is trying to verify themselves and they're having problems, they can press the message button and then it literally sends a message to me, Jay, the whole team, like our team platform, or mine and Jay's mobile phones, which is we can get to it very quickly. And I think that part of the reason why we made the decision to do that was because of what we were seeing in credit unions, in the sector that we work in, because you can have it all. You can have it all with technology. You can have something that's speedy and quick and works for the majority of people, but also something where people can reach out and have their hand held through a journey that's quite difficult. I also think that in terms of the ease of use of a journey, Monzo ruined it for everyone. They ruined it for literally everyone, all types of financial providers, but kind of anybody who builds software, really. But they often are criticized because it's so hard to contact their support, and it's so hard to get any help at all from that team now. And that's something that I don't think that credit unions will ever lose. And I also think that when it comes to that younger generation, I think we always think of them as digital whiz kids, but actually with we're in our research, we're seeing more and more that there's less knowledge there on how to navigate financial systems. So I think that there's a huge space here where it's actually a really exciting opportunity for credit unions to sort of fill that void and educate and do what you all do so well.
And I think young people still, although we're using them as an example, it's not necessarily young people. You know, there are new members that are coming to credit unions through more visibility around credit unions that aren't always in that sort of younger demographic, but do have certain expectations. And I think that in particular, the younger people that we speak to when we're speaking about, do you know what a credit union is? They are interested in credit unions because of the ethics, because of the ethos. They sort of buying into that community feel and that sort of separation from high street financial services. So they do still want to be a part of that, but they do also have, and newer members, not just young people, certain expectations in terms of turnaround time. And I think if we're talking about seriously doubling this sector, what that looks like, is it acceptable for somebody to wait 2, 3, 4 days for a decision on a loan where you're competing companies, your Monzors, your banks, whoever it is that you're using, can turn these around in minutes? Is it still acceptable for somebody to wait that amount of time to be part of that credit union community? Is it okay that we say, well, that's just the way it is, that's the way it's always been? Or should we be pushing for a speedier service while still having the ethics and the ethos that sit behind what a credit union is all about? I think it's interesting.
Oh, yeah. Go on, Debbie.
No, I think it's just interesting when we start to, and Liz has sort of mentioned in the chats, and it's great that Liz is on the call because Liz knows far more than I about credit unions and her members, definitely. But even for Liz's credit union, she's sort of commenting, if we don't embrace automation and technology, we will lose a generation. And I absolutely agree with that. It is the future, and it is where we need to be moving towards. But how do we do that? How do we do it safely? And how do we retain that credit union magic? So it's great to speak to you both and sort of hear how you can do that. And there are other competing tech companies out there. There's fintech. There's a lot of people out there that offer the moon on a stick and can provide all these services, and that will say that they will absolutely protect your credit union and its very nature of what it does. But I think it's nice to sort of hear the justification and the reasons behind your business have run the way that they do. So thank you for that. I found it really, really useful. So we are heading into Q&A. There are some comments in the chat, but if you do have some questions, please do throw them in or raise your hand if you'd like to speak to us. It'd be great to see you as well. And then we will just kick off with some, we've spoke about what's lost through automation. We've absolutely done that. And that sort of credit union magic, I think, feels like the thing that people are most concerned about losing, the identity of a credit union. But how can credit unions modernise at a pace that feels safe and achievable? I'd be interested to know from Chloe and Steve's perspective how they can do that. And then I can see we do have some questions coming in now as well.
Yeah, I think the modernising at a pace which feels comfortable is one of the topics that we kicked around in our sort of preamble last week. And I'm going to say something, I don't know whether it's borderline controversial or not, but if you want to feel comfortable, I don't think you're progressing enough. I think you've got to feel a degree of discomfort. Our job is to support you through that. And one of the things that we've worked extremely hard to do, and we've really put this to the test in the last sort of 3 to 6 months or so, because we've onboarded 20 new credit unions in the last 2.5, 3 months. Now, many of those are taking single service from us to begin with, and that's absolutely fine. And I think it's proof that that you can grow iteratively within the platform. I nearly said ecosystem, but Andrew would have immediately taken himself off mute and shot me. But you can very much grow iteratively or in a modular way. Take one product at a time, understand that benefit brings to you, and then look to take the next one and the next one. And that's starting to become almost the sort of de facto model for onboarding. So in summary, I want you to feel a little bit uncomfortable. That's a sign that we're doing the right thing. But we're here to support and get you hopefully using bits at a time at a rate that is comfortable-ish.
Excellent, thank you. We've just lost Liz. Just as I said, Liz disappeared. Apologies. Hopefully we can get Liz back, but I'll move on to Peter, and then I've got 2 questions in the chat. Peter, welcome and congratulations on your new name change.
Thank you very much. Hi, Steve. I think we've spoken before on calls recently. One thing that we're seeing in terms of onboarding, we're not having a problem getting new members and getting them to join online. It's the account activation side in terms of them paying the joining fee. Now, we're not on direct debit, and within Circle or Lace at the moment, it doesn't have the capability for a direct payment to be taken as part of onboarding. So within the Vouchsafe or incuto offering of onboarding, is there that ability to get them to pay the joining fee at that stage? Because just for some stats for us, I think we opened 1,700 accounts last year, but only activated about 600 of those. So that's 1,100 members that we potentially lost through maybe not having the ability to capture them at source at that time. So just wondering what technology is there outside of direct debit to sort of capture that joining fee as part of the members onboarding experience, rather than us trying to chase them down for several months afterwards.
Yeah, no, understood. Okay, I'm going to do something a little bit unconventional here. Andrew, could I just ask you to step in and just, because you'll answer that probably better than me, if that's all right.
Okay, that's fine, Steve. I was furiously tapping keys, we'll talk to you about that one separately, Peter. Yeah, look, there's a couple of ways of doing it, Peter. One of the ones that we're working with is direct payments using a virtual account. So again, slightly controversially, the potential to offer a brand new member a bank account and sort code number that's virtual, that relates to their member number with you, but it becomes a thing that they can directly pay their fee to straight away, and we can immediately reconcile. It cuts out the card fees and all of that kind of stuff. We can also do direct debits if you want to. A lot of credit unions, though, take the first payment when they issue a loan. So if you allow someone to take a loan immediately when they join, you could just roll that in, and we can just add that to the paperwork on the loan journey, so they don't. Isn't
that a little bit unethical, because they're then paying interest on the joining fee?
No, we can skip the interest on the joining fee, so it won't accrue interest on it. It puts it as a separate line on there. So out of the first payment, you just take £1 more at the beginning, or however much the fee is. So there's lots of different ways of being flexible about that. The only bit to weigh up is the fact that technically they should have had the pound in there before you issued the loan. But
yeah, that's the problem. We've got a big backlog of people that have joined and borrow, but they haven't activated their account, and that is very resource hungry in terms of contacting them each week. We do that over a month, and then once the loan's been a month old, we then cancel the loan as it's sort of out of date, because the member's situation may have changed in the last 4 weeks compared to when they originally applied.
So Peter, just write down the words virtual account, and that'll make me really happy, and we'll come and talk to you about it, and it'll make Steve incredibly, talking about putting Steve out of his comfort zone.
Okay. Another question. You mentioned about the taking it on product by product, which I think is the stance we're sort of looking at ourselves at the moment. We've got the app going live hopefully next week, and then look at the onboarding. Now, is there a difference in price by taking it one product by one product as taking it as one go? So if you get to the all products route, it's the same cost as if you onboarded all of them in one go as you would individually. There's no discount to take a lump.
Yeah,
in one go.
No, there isn't, Peter. So I'll try and answer that as best I can. Basically, we looked at we took a look earlier this year at how we charged for the for your membership effectively for Members Hub, and we've altered it to grow with you as you take on additional services. So there is no penalty to coming in to sort of, I say limping in, that sounds like a negative, but there's no penalty to just sort of taking up a small amount of services to begin with, and that fee just grows as you adopt more and more services. So no penalty. Is that a discount? I suppose it represents a discount as you're sort of settling into the services. You're not overpaying for things you aren't using.
Okay, so it's not like individual onboarding fees, whereas if you took it all in one go, it'd be one onboarding fee as opposed to individual ones. So, yeah.
The nice thing, Peter, is we don't charge onboarding fees, so there isn't anything to discount.
You can use that one, and I'll get 10% on next year's revenue from it.
Deal.
You
One more point.
You can have 50% of our onboarding fee revenue, Peter.
And going back to the verification point I made at the beginning, we have a lot of members that are referred to us by the local councils who are maybe homeless, so they don't have ID, they don't have an address, etc. What we do, we have a form that the council or the job centre will sign to say that they've identified the member on our behalf, and should there be any issue, it would be on them rather than us moving forward. Is that something that's compatible with Vouchsafe in terms of like an internal verification?
Yeah, that is, Peter, that's like the perfect definition of a vouch. Yeah, that's what we're named after. So we actually built our first ever version of Vouchsafe hand in hand with the head of volunteering at Crisis Edinburgh. And we built vouching so that essentially what happens is a member can start their verification, they can select a referee, and that referee could be someone from the local council. That person, the referee, gets an email, and then they scan they verify themselves, basically they scan their own documents, or they can verify themselves via their work email. That's entirely up to you with your risk appetite. And that's essentially the same as a signed letter. So those two identities have been verified together, and your referee is vouching for your member. So that's, even if people have got nothing, that's the process that we put them through.
That include doctors or care workers as well?
Yeah, doctors, care workers, social workers, anyone that you're interacting with. I mean, you can also do personal ones, but if you wanted to keep it sort of professional, then it can be local council workers, a work coach, anybody that's in that space.
Oh, okay. So if there was a member of the family that was referring the member to us and they had ID, and the person referring didn't, we could get the member of the family to vouch for that individual. Okay.
Yeah. Absolutely.
Perfect, thank you. And there is a question in the chat, I think to an earlier point that you made, Chloe, around having members directed to your mobile phone might work to start with, which is, a very much a co-op thing. You're right there, deal with it straight away, but it doesn't sound like a scalable model. So how could you scale this level, very dedicated, very instant level of support? How can you scale that?
You're right that having it sent to our phones isn't scalable, but what we've started to do is that every single member of Vouchsafe team, there's 7 of us at the moment, and as we grow, every single team member will do customer support. So at the moment, we've basically got a shift pattern, and certain people take certain days, but it's really important to me that the whole team and everybody, whoever works at Vouchsafe, understands what the users, the members, or the businesses, in this case credit unions, are going through when they're using our product. Otherwise we'll never get better. And we're finding that we've got quite a low percentage of our verifications. It's like, I think it's less than 5% of our verifications require support. So it's obviously not scalable at massive numbers, but we use everything we learn in support to basically inform the decisions that we make in the product. And by making it, first forcing the whole team to do support, and now I think they quite enjoy it at times, that means that they know what Vouchsafe is like in the wild and how people feel about it. Yes, perhaps some sanctions checks too.
Perfect, thank you. Another question for Chloe from Dominic. How does this all fit, especially the onboarding members part around the Data Use and Access Act and the government's fledgling digital ID scheme holistically? Is it something that you're plugged into, and might that make things easier?
Yes, and yes, it will make it easier for those who have it, which, if it's mandatory and who it's mandatory for, seems to be a mess in the press at the moment, but it will make things a lot easier in terms of that verification journey for those who do have it. If they name it Brick Card, I'll be really disappointed, because that is a terrible name in my opinion. But it's something that we have the certification to use and to verify, and then we will continue developing our anti-fraud checks and the other data that we pull on in order to check that someone is who they say they are, and that they aren't doing anything suspicious. So although digital ID will make that journey quicker for the user and more reliable, we'll still be bolstering everything we're seeing with those anti-fraud checks as well. So yeah, we're really excited for it. We seem to be some of the only people in identity verification that are. So if anybody else is excited about it, come join the club. Really great question, Dominic, as well. Thank you.
Amazing, thank you. So I think I can see we do now have Liz back. Apologies, Liz, we did lose you for a little while. You had your hand up to ask a question. Has that been answered during the conversation so far?
I wanted to tell you that my laptop was about to crash on me.
Oh no, Liz,
and then I tried to get on using my mobile phone, my work's phone, and that failed miserably. And I'm back on now using Ellen's, because Ellen had the link for it. So we're both in Cran Hill. But I'd just like to say that I already totally embedded in all things incuto, all things Vouchsafe, all things that can come through that journey. And I think we'll be left behind if we don't adopt any of this. I will celebrate 50 years in the movement next year. And well, actually, I'm 50 years now, because it was before we became a credit union that I was involved in it. And I also made a comment that my father was the original Vouchsafe, because that was something that I really found exciting about the Vouchsafe journey and about vouching for people. And it's so important. It's a very dignified thing to do as well, especially when you read some of the stories that Chloe Coleman puts out there, and the whole humanity, a woman of humanity, which is incredible. There's not enough of it going around, and hats off to you, young lady.
Thank you.
I doff my cap. So I think we have to embrace it all, take whatever we can get. My concerns are in and around the Scottish movement, and where we lag behind sometimes when it comes to, we've got an attitude towards getting money. Because we want to stand on our own 2 feet. If you remember the man John Hume, from the former leader of the SDLP, and also a man who would say that his greatest thing in life was to be a director of Derry Credit Union, civil rights campaigner back in the 60s in the Bogside in Derry. And John Hume said it at his inaugural speech with us in 2005 at Glasgow University, that credit unions should be able to survive on charging 12.68% APR, 1% per month on the reducing balance. And at that time, and for credit unions at that time, that was absolutely right. And we did do it. The whole landscape has changed dramatically now. And we have to embrace all of those changes. And we can't survive like that. May I also add that John also said that we should always be looking to reduce that. Sadly for me, quite a number of years ago, the British movement decided to increase that to 3% per month, which is now become an exorbitant rate of interest. And I understand why. I understand the arithmetics and the mathematics behind that, and how you put a price on a loan. It's numbers. Don't forget, we come from a voluntary background. Credit unions were voluntary led, so we never ever attributed a cost to that, which we should do, social impact, etc. But I think we need to embrace it all. We can't, or we will lag behind. And I also think that a bit of what's been going on with the government, with the £30 million, etc., to grow. I'm going to say something controversial, which wouldn't be like me, but we don't need the government to want us to grow. We want to grow anyway. Credit unions are wholly inclusive. They are for everybody. They're not for the financially excluded. They are for everyone, and they always have been. And sometimes language can destroy what we are and who we are and what people think we are. However, all of that said, I think we still need to embrace all of the technology that's available. And I much prefer, and I am singing the praises of Incuto, I prefer the way they're doing it. I love how it's all coming through Incuto, you know, with Vouchsafe, with OnePay, with whoever else, whatever else can happen, because that's less for us back at base to have to be overly concerned about, because it's all happening behind the scenes and it fits and it works. You also need to have the right people around about you that can actually apply it. So that's all. I won't say any more. Thank you.
Thank you, Liz. No, it's a really great way to sort of wrap us up. So thank you. Yeah, you're absolutely right. Automation is about enabling people, not replacing them. You need to take your people with you on this journey. Absolutely. So thank you to everyone for joining the call today and for your really, really useful comments and contributions. Thanks to Chloe and to Steve for walking us through those really great topics. Please do continue the conversation. I think Jay's mentioned in the chat, the team are going to reach out if anyone wants to speak about this any further. But for today, thank you very much for joining us. It's been a great session.